about 2 months ago, we put out this video about why the MSTY ETF will destroy your retirement. We got hundreds of comments, and based on those, there are some pretty glaring misconceptions about MSTY. So I'm back to clear up the top 5 misconceptions. Let's dive in. First, let me just say, since there are obviously some very strong opinions about MSTY, and I want to be clear about what you're going to get from this video. I'm not trying to call your baby ugly or waste your time with clickbait. This is thoughtful, professional analysis from a CFA Charterholder and investment professional who, by the way, works with some of the most successful investors in the world and some of the largest holders of strategy stock. So, yes, I do know what I'm talking about. And no, there is no agenda here except to help investors make smarter decisions. Now, beyond the totally useless comments like the person who said, I'm a clown, or the one who said it's total BS, but when I asked him to elaborate, he couldn't, or the one who said that the post hadn't aged well right after it was posted when it hadn't aged at all, and didn't try to call me a dumbass but misspelled it. Beyond those, there are actually some real misunderstandings about MSTY, so that's what I'll be addressing today. The number one misconception I've heard time and time again in many comments is basically that in the past it went up a lot. So after that, it's all free money or house money. There are actually two common misconceptions here. Let's start with the concept of house money. There's no such thing as house money in gambling or in investing. It's always your money. And if you have, say, $1,000 in an investment, it doesn't matter whether you used to have $500 or $2,000. If you have $1,000 now, then that's how much you have. The only thing that should drive your future decisions is what you think will happen in the future. And often the past isn't a good predictor of that. If you won the lotto last week, would you expect to win it again next time you played? Probably not, right? Because we all know winning the lotto is a very low odds event. And that brings us to the second and very much related misconception that just because this did well in the past, it'll keep doing equally as well in the future. Unfortunately, MSTY being up as much as it was in its first year was also a very low odds event, and you can't expect it to repeat very often. Maybe never again. Mr. Smile Gaming sums it up nicely. First, he makes the house money comment we just discussed. Then he says, which stock can give you a 100% gain in a year? Very few. Actually, lots of stocks can go up 100% in a year, especially small, highly risky ones. It's easy to find them in hindsight. What's hard is finding them in advance. And one of the worst places to look for a stock that can go up 100% in a year is a list of stocks that went up 100% last year. Chad Martin says, and this guy is a professional money manager. You don't have to agree with the product, but you can't deny the history, charts, and growth. Apparently, he almost wrecked his car listening to this. Tara Slayer says that since it's up a lot since inception, I'm completely wrong in my analysis. But I never said it didn't do well in the past. Here's what I said. So let's start with why the returns are so unreliable. MSTY has only been around since early 2024. And in that time, it's up 190% with dividends reinvested, way behind strategy stock, up 280%, but way ahead of Bitcoin. And 190% in a year is pretty incredible on its own. So we saw it did way better than Bitcoin on the upside and way worse on the downside. So I would think of strategy as sort of like a leveraged Bitcoin position. Now, what's the problem with that if we assume Bitcoin and strategy will go up over time? They may go up over time, but they won't go up all the time. We haven't seen it since MSTY was started, but we have seen what can happen with Bitcoin and strategy. In 2021, strategy stock fell over 64% in just 3 months, while Bitcoin was only down 17%. Then, after a partial recovery, it fell 76% in about 8 months when Bitcoin fell 58%. And before strategy started buying Bitcoin, Bitcoin had lots of big drops like that, like when it fell more than 84% from late 2017 to late 2018. Even though Bitcoin and strategy recovered, MSTY may not if that happens again. Right there in the fine print on their website, it tells us that MSTY halves the potential gains when strategy goes up, but is subject to all of the potential losses when strategy goes down, which may not be offset by the income received. The third common misconception is how the income works. This person says if you hold MSTY for a year, you get all your capital back. So you should just buy TSLY, which is a similar ETF on Tesla, and MSTY, take out all the income, and you'll get rich fast. Except that you won't, because a significant portion of your income is return of capital, which means they're just giving you your money back. More on that in a second. These next two people make it seem like the income is consistent. It's not. No one has made the same amount for 6 months in a row. And looking at MS2I's average yield, ignoring the price variations and assuming future dividends will be similar to past ones, or assuming that the price per share will stay the same, are all missing the same very key aspect that makes MSTY so unattractive. First, here are the historical dividend payments. It started at over $4 per share. Its last payment was about 1/3 of that. It's been wildly inconsistent and, more importantly, has fallen over time. It will fall over time, merely guaranteed. That's why you can't look at the average and assume it'll stay the same. You also can't assume it'll make you rich because so much of it is return of capital, and you can't assume the dividend will equal your return because you'll likely be losing money on the NAV due to the massive built-in NAV erosion on this. Here's how it works. The yield is a percentage of NAV, and in anything other than an incredible year in Bitcoin and strategy, like we've had since MSTY's inception, the NAV is likely to go down. That means your yield is likely to go down over time too, because the yield is based on the NAV. As a percentage, the yield will fluctuate around and may stay around the same, but it's a percentage of the NAV, and if the NAV goes down over time, your actual income payments will also be very likely to go down over time. And the third reason, and the most important reason, that the yield is misleading is that you really can't take it out, or you'll be nearly guaranteed to run out of money in your retirement. Remember that glorious 191% return you've gotten in MSTY since its inception? Well, if you've been taking out the income, you'd actually be down 5%. And that was an incredible year for Bitcoin and strategy. If you had just fast forwarded to March 27th and invested there, your MSTY would be down 55%, while strategy stock was actually up 33%. That's an 88% gap. This significant NAV erosion happens because a big portion of the income that you receive is return of capital. They're basically giving you your money back. And if you take all that out as income, you are almost guaranteed to run out of money. You're just taking the money out of your account, basically. Even if you're reinvesting all of the income, the underlying single stock position, which is basically a leveraged Bitcoin holding, is so incredibly volatile that it destroys the long-term potential of a covered call ETF. It basically breaks the structure so that it's almost impossible for it to work in the long run. Sure, if it goes up 100% every year, it'll be amazing. And if we have another 50, 60, 70, 80% drop in Bitcoin, of which we've had many before, strategy is likely to go down even more than that, and MSTY is likely to lose a significant amount as well. If you're taking out the income, then you'll definitely never recover. I mean, in a year where the thing was up 190% total return, it was down 5% if you were taking income. So that's the number one reason that income is so misleading. The fourth misconception is that no one, including me, wants the little guy to get ahead. This one is just offensive, so let me give you a little dose of reality here. I am a very successful investor professional with a lot of experience. Within the last week, I met with multiple investors who had billions, with a B, of dollars invested with my company. Next week, I'll be traveling to another country to be a featured speaker for hundreds of professional investors. I've worked 7 days in a row, including Easter Sunday, and I worked at least 12 hours every day this week. Do you really think I need the $10 I'm going to make from this video? No. What I need is a break, but instead, I'm spending my Saturday creating this video because I really care about helping the little guy get ahead. If you're watching this and you want to learn how to become a better investor, from someone who actually understands investing and doesn't have any ulterior motives, hit that subscribe button. For the fifth misconception, I'm going to loop together a couple of strategies people have shared about how they're using MSTY, which I think are based on flawed logic and unlikely to work out. The first one comes from Citizen of the Year. First, he thanked me for taking on his video request. You're welcome. And second, he said people were using this as a core position in their portfolios and even taking out margin loans against their houses to buy more of this. To be honest, I was skeptical that anyone would do that until I saw multiple people tell me they were buying this on margin. This person says he leverages it and uses the distributions to pay back the margin loan. He also says you need to be precise on entry and exit points, which is correct. It's better than buying and holding this if you're right about the timing, but most people are not right about the timing, unfortunately. Then this person said he's planning to invest $100,000 in it, reinvest the income until he 10x'd his money, and then invest in something safe that yields 8 to 10%. Oh, and he's going to base his timing on the bull and bear cycles of Bitcoin. First of all, something with an 8 to 10% yield is not safe. Second, correctly timing highly volatile investments is much harder than most people think, and this whole notion is predicated on the idea that it'll keep going up 100% per year with the dividends reinvested. That's just wildly unrealistic. To expect the past returns to continue or to expect that you can successfully time this to make 10x your money. It's not impossible, but it's a highly unrealistic expectation. The problem with this strategy was touched on in the original video, and the misunderstanding gets captured well by this comment. There were a lot of them like this. You mean if I bought at the top and sold at the bottom, this would be a bad investment? Thank you for the economics 101, amateur. Okay, well, the commenters who said things like this were missing two key things. First, here's what they were referring to, and why this timing strategy is so unlikely to work out. Did investors really capture that? Probably not many of them, because the heaviest amount of buying activity was here at the top, and the heaviest amount of selling activity was there at the bottom. So investors' actual timing, on average, has been really bad in MSTY. That's the reality. I'm sure some people have had good timing, but on balance, most investors have not really captured anything like the good returns you see when you look at a backward-looking chart. And those returns are highly unlikely to be that good going forward. So that is not a realistic expectation going forward. The second misconception from commenters like these is that people will only do poorly in this if they time it badly, or it only went down if you bought at the top. No, the issue with MSTY is that it's very likely to go down over time, even if Bitcoin and strategy go up. Let me show you this again in case it still hasn't gotten through. I'm not saying it hasn't done well in the past, and I'm not saying it only won't do well if you time it wrong. I'm saying that both the NAV and the income are likely to fall over time because of MSTY's flawed structure, even if the strategy stock and Bitcoin do well. That's an 88% gap. This significant NAV erosion happens because a big portion of the income that you receive is return of capital. They're basically giving you your money back. And if you take all that out as income, you are almost guaranteed to run out of money. You're just taking the money out of your account, basically. Even if you're reinvesting all of the income, the underlying single stock position, which is basically a leveraged Bitcoin holding, is so incredibly volatile that it destroys the long-term potential of a covered call ETF. It basically breaks the structure so that it's almost impossible for it to work in the long run. I hope that clears up a few of the key misconceptions. I know this isn't what a lot of people want to hear, but it's my real professional opinion of how this is likely to go in the future for investors who decide to take up the income. Don't want to take it from me? How about from this guy? He says he lost 4x the yield holding another yield max ETF that invests in a highly volatile Bitcoin-related stock, Coinbase, in 2024, and he'll never invest with what he calls lose max ever again. The yield is bait. NAV erosion alone is just the beginning, and market volatility is the kicker. He gets it. This guy does too. The yield max funds are mostly return of capital. Yes, it's done better than all the other yield max ETFs, but he doesn't think they're sustainable in the long run. I agree with that. And he says just look at UOTY and TSOY since inception. Ouch. And you know what else we did a video on, saying it was unsustainable, which prompted a lot of very similar comments as our MSTY video? TSOY. And how has that worked out so far? Not very well. It's lost more than 1/3 of its value since its peak in December, with dividends reinvested. If you'd been taking out the dividends, which most investors do, the value of your investment would have fallen by more than 50%. If you plan to continue taking out the dividends, you'll probably never recover. That, or something worse, is what I'm trying to help people avoid with these videos. Just because it hasn't happened to the MSTY yet doesn't mean it can't happen. Is that the kind of risk we want to take with a retirement income portfolio? Is a falling income stream and a good chance of running out of money a good retirement strategy? If you ask me, it's not. So I'm trying to help people avoid disaster so they can live a better life. Sometimes in investing and in life, taking risk makes sense. Sometimes it doesn't. In my opinion, for retirees, MSTY is one place where it doesn't. Last thing, we have a free Discord with over 450 members. If you want to continue this investment conversation, feel free to join using the link below. Thanks for watching, and I'll see you in the next video.